Okay, so gold has hit its all-time high this week, 2450. It has reached its highest point, and since then it has come down a little bit, but the overall trend is much stronger. It's showing a very strong bull signal. Okay, and the prediction on the street is that gold is likely to hit 3,000 ounce this year, end of this year. And there are some major reasons behind it, very strong logical reasons behind it, and I'm going to share those reasons with you in this video, and you can make your own judgment. Okay, not a financial advice, but I'm giving you all the insights with regards to the gold price movement. So the number one reason is the geopolitical tension. So since Russia-Ukraine war started, the world has seen that the global monetary system can be used against you. Okay, you can be hijacked in this whole system. The way the world reacted, especially the West reacted against Russia, they seized all of the Russians' foreign assets, which were actually parked on the other central banks' balance sheet, like especially US treasuries, Euro treasuries, currencies like in USD and Euro. All of these foreign assets that Russia owned were actually confiscated by the West. And not only confiscated, they actually used them against Russia by funding the Ukraine war. Okay, so the world has seen that this system is so fragile, anybody can be taken hostage on this, and you cannot do anything about it because there is a big counterparty risk in the global financial system today, and that counterparty risk has gone up significantly since the Russia-Ukraine war started. So watching all of this, all the other central banks in the world are thinking, oh shit, if this can happen to Russia, we are nothing. Like, think about Turkey or Taiwan or Malaysia or Singapore, those central banks. What would they think about watching all of this scenario? Okay, so since then, all the major central banks in Asia especially, they started piling up physical gold. They're actually storing a lot of their reserves in physical gold. So the central banks have been piling up big time the gold buying spree, which is driving major price movement in the gold market. Okay, and not only the central banks, the retail investors in Asia and Middle East, they're buying a big amount of gold in jewelry and in bars and coins. Why? Because pretty much everybody's seeing that this whole financial system is on its last leg. At some point, this is going to collapse. You can kick the can down the road all the time. Okay, there is a lot of debt in the system, especially on the sovereign debt side, and you cannot just continue sustaining this. Okay, so the world is seeing this financial system is going to change at some point. What's going to happen when it changes, nobody knows. But the people who understand the system, they're actually acquiring gold as a purchasing power, as a store of their purchasing power. Okay, and we're not seeing this happening in the western part of the world. Why? Because the western part of the world haven't seen the currency collapse in their lifetime. Okay, go and ask Turkey, go and ask people in Argentina or Brazil or Zimbabwe. They'll tell you how the currency devaluation happens and what it feels when you lose all your purchasing power when the currency tanks. So that's why all the major central bankers and the people in those countries are piling up gold as a safe haven for their purchasing power. The second reason is the miners are struggling right now. Okay, their input cost has gone up because of higher energy cost, high wages, inflationary pressure. So they are not able to continue producing gold enough. So the supply is not coming up. The new mines are not coming up because of political pressure from the government, ESG nonsense and all that stuff. So the new supply is not coming into the market, which is why supply demand imbalance and the prices continue to go up. The third reason is now the world is seeing that the Federal Reserve is kind of stumbling, upon their words, and they maybe start cutting rates since, from September, which means when the Federal Reserve cuts rates, typically the dollar from a DXY perspective from against other currencies will go down. The dollar has already been moving sideways. If you look at the DXY index, it has reached its peak in 2022, and since then it has been moving sideways. So if the interest rate is cut, it will push the dollar downwards on the DXY index, and that will be one of the major reason why the gold will go up, because when the dollar goes down, typically in the history we have seen, this will push gold price up. So that's the another reason. And because of all those BRICS currencies news, even though it's not really real, this whole de-dollarization, but it will have some pressure on the US dollar, right? So this will also, give, fuel to the gold price movement as well. So the gold, is, I think it's a time for gold to shine, and I think it's going to go up. Whether it is going to hit 3,000 an ounce by end of this year or not, nobody knows. But I think for me, I would keep some of my purchasing power in gold, because gold is not an investment for me. Gold is a insurance policy for me. If I want to protect my purchasing power, outside of the current financial system, it has a lot of counterparty risk. I can keep some stuff in my gold, because when you don't have counterparty risk, you are independent. Nobody issues gold to you. Okay, it's a physical asset, versus the fiat currency, the bonds, the stocks, everything is issued by an entity. That entity can go broke. So that's your counterparty risk. In gold, there is no counterparty risk. You can keep it. You can take it with you wherever you go. You can sell it in another country. Okay, so there you go. That's your insurance. That's your purchasing power. If you want some help with regards to buying gold, let me know. Reach out to me, and I can connect you with some of the gold dealers. And don't forget to check some of the links in the description below. There's some free stuff available for you. And if you like this video, give me a thumbs up. Subscribe to my newsletter as well, because that is a direct connection from me to you if you want to stay connected. Okay, until next time, take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.